Hey everyone, John here from School of Trade. Today we're going to be taking a look at a sell off of a Megaphone pattern high coming on crude oil here. So really nice setup overall in that we're respecting this Megaphone very well. It's actually kind of surprising how well we're respecting it. Even after they blew off the lows down there a little bit earlier, they rocket shipped their way up to the highs, and now we're turning off of the highs as well. So I have an entry short at 38.84, just selling underneath, that we had that giant bull candle up. They went into bear candle afterward, but that never triggered in a short trade before going into a weak bull and then into a secondary bear, which is what we're selling underneath. So we're finally getting triggered into the move, which is kind of what we've been waiting for at 38.84. Now the stop is going to be above the highs here because I really don't want this to come back at all. So we'll put the stop up there at 39.03 for right now. We may try to lock it in a little bit tighter where we can, but overall that's going to be the stop. Now in terms of the target, generally speaking, with a Megaphone pattern, you're looking to fade this all the way back down to the lows. Now, the one issue in my mind of selling all the way back down there, even though we may get there, by tomorrow, we're really not, it's hard to sell in the face of something that strongly to the upside. So instead, what I'm going to look to do is I'm going to look to fade this back to the moving average, assuming that we're probably going to have buyers that try to come in off of the moving average test, considering how strong of an up move this is. Now, this may also be a slight little channel working its way higher. There might be some other factors in the mix here, but right now, I think trying to sell for a massive target all the way down to the lows is just, it's not feasible. It's not being realistic. So I'm looking for a target down at the moving average, and once we start coming down into the moving average, then we'll look to exit the trade. Now I'm looking to take all in, all out at the moving average because, again, that's kind of where I'm anticipating them bouncing it anyway. So that's kind of the game plan at the moment. The risk reward is beautiful on the trade. Everything is setting up really nice, especially with the entry at 38.84, kind of a secondary sell right off of that exact same area. That's the same thing that we saw back here where, they blew off the lows there. They tried it twice and then just ripped to the upside. In the chat room, we were talking about this as a swing long all the way back up. Beautiful run higher. And now we're looking to fade it on the other end. But again, since that was so aggressive on the upside, I'm not really anticipating this going back down to the lows, at least not right away. Not as fast as it went up like this. I'm actually expecting the buyers to want to buy the pullback and try for another move up. So we'll look for a shorter little scalp to the downside. Right now, entry at 84, looking at 56, but that target at 56 will change depending on where the moving average is at the time that we come close to it. So we'll let the sellers do their thing, and we'll see if we can grind this down to our target. All right, pushing down into that EMA. So far, technically we just moved it up. It was at 59, but the EMA is rounding up to 38.60 now. So our target being at 38.60, we've technically come, 2 ticks away from it. So since we've come so close to that correction that we've been looking for this entire time, I'm looking to move my stop in. So I've got my stop at break even right now, essentially just telling the market that either you're going to get my target at the EMA or I don't want the trade anymore, especially if it goes all the way back up after seeing this beautiful correction that we've been kind of waiting for. You could argue to lock your stop in a little bit closer. You could even float it a little bit farther back, right? You could see something like this where, well, that was a huge bear candle right there. You really don't want to see the high of that broken, so you can move your stop back there as well. For me, though, since we've come so close to the target, I'm going to move my stop to break even. There's no sense in leaving the risk on the table anymore. And if we can get to 1 tick from our target, then we'll lock in even tighter here. But until that point, we're just kind of sitting and waiting for the market to either continue or bounce from here. Definitely anticipating buyers coming in, especially with a test of the moving average, but with the move down that we're seeing right now, it wouldn't be a surprise to see it cut through it a little bit, but in the long run, definitely expecting the buyers to try to pick this back up for another move higher. So now we're 1 tick away from the target, so let's lock the stop in nice and close. Well, it doesn't matter, we got the target filled. So beautiful move to the downside. That's exactly what we were looking for, and overall, given the context of the situation here, you may be able to hang on for a bigger move down, maybe to a target at 36 or 30, or maybe even the prior low of day at 14, or better yet, even all the way down here. But given how strong of a move up this is, I think there's still going to be a lot of buyers that are juiced up, ready to buy this, thinking, wow, they missed this whole move up. They're going to try to catch a second leg up. So it would make a lot of sense to start seeing some buying pressure here, and something that I definitely don't want to sit through. So I'm more than happy taking my target there. Got short 38.84 down to 38.60, and that's going to do it for me. So if you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com, and as always, we'll catch you next time.